Hello, everybody. My name is Alesh Eisner, and this is my friend Rob. We thought we would do a something a little different this time, bit of a podcast format. So this is going to be a series of 7 questions in part one, 7 questions in part two. We'll just read out the question, and then we'll both answer it. We'll debate. We'll ask questions and hopefully everybody will get some good value out of it. So here we go. Question number one. It is absolutely amazing to hear that you are financially independent at your age. Can you summarize how you got to this point in your life?
So, hello everyone, I'm Rob, and it says that I'm financially independent at my age, which is 37 right now. And I don't really recall when I got to this status, I guess. I never really marked any barriers or any milestones. But how I got here is from my first engineering job back, I think, 10 years, more than 10 years ago. And that that gave me a solid salary, I think about starting at like 55K and then built it up to 75. But what this kind of gave me is the ability to get a mortgage. Like that is the leverage I needed to get kind of ahead, you call it. So from my mortgage and real estate, over time, it definitely made more than the salary itself. And during this corporate job, I did a lot of side jobs. We have a night market here in Vancouver, and I run like different stands. And as some of you may know, we deal with a lot of cash. And with this cash, this is where my down payment came. So I used all this cash to funnel into down payments to real estate projects. And then I used my corporate job to finance it and get more money from the banks. And that's kind of how I got the ball rolling. But then as time went on in my night market job, I find that on some weekends, I I made more money in one weekend than 1 month in my engineering job, which is which is like mind blowing in my opinion, because I spent like four years to get that bachelor's degree, and all this time I could have made more money, but in this one weekend I can make more than a month of salary. Just think about that. Once you're able to see this light, you I think like shortly after I left my job and just went full force. And then that's when I went to China and Hong Kong, and I did some business there. And I funneled my cash flows there to investing into real estate there as well and stocks. So, and in Hong Kong, the market is very different. The stock market, I mean, people leverage a lot. People like there's no one just buying plain stocks and sitting and holding. People like leverage in and out like 5x, 10x all the time. There's like just a lot of home run players out there. And I picked up a few tricks, I guess, and I got lucky a couple times. And here we are, I guess. So that's my story of being financially independent. Yeah.
But so I remember the Chinese stock market in general. There was a lot of ups, but there were also some downs. You got caught in any of those, or managed to avoid them?
Yeah, for sure. Everyone learns from their mistakes. And what I learned is to learn the skill of risk management, where when you lose, you kind of don't, you try not to lose your shirt, we call it. But when you win, you want to be able to leverage and really kill it. Like if we had just stayed in neutral and just sat on it, I could have been up and down and up and down, and I could have been like broke even at the end. But with these all the leverage plays, let's say if you make a 500% gain and then you only lose 100% in the next play, overall you're still up. So you still have a chip and a chair, we call it, so you can keep playing.
So into these, I would say, fairly risky investments, what percentage of your portfolio did you put in at any point?
What percentage of portfolio? I had real estate sitting more than 50%. So my play money, and I always have cash on the sidelines. I'd say 25% cash on the sidelines and maybe just 25% just these speculative plays, we call it.
All
So I
right.
did manage my risk that way.
So not a tiny bit, but not your whole
No,
savings either. Okay, cool. Uh, and so it turns out the business world was way better to you than the actual work world.
for me, yes. For me, yes.
Yeah.
I mean, a lot of people will be happy with the corporate engineering job and sitting there for 30 years. But I found out really, really early on, like my third week in, I look around and I just didn't want to be there. I like the status, I like the collared shirt, I like walking in downtown, but not much after that.
Yeah. Yeah, I think it's depending on whether you're entrepreneurial or whether you're risk averse, and some people don't want to take the risk of starting a business, and so they'll work for somebody else for years, and then they have a secure job, but they're not going to to make it big anytime.
For sure, there's no right way to live your life. I'd say, yeah.
Yeah, I think it's a person's personality that sort of drives what they can and cannot do. And so by virtue of you being able to take those risks, you were able to uh, make make a better life for yourself.
Yeah. So let's hear about your story, Alash.
Yeah, well, it all started on a cloudy day in 1973. Kidding. But the date is right. I am 47. So, Rob, your financial independence is more impressive than mine. But yeah, my family came here in the 80s as immigrants with virtually nothing. So I was raised here. I went to Simon Fraser University, but I lived at home and I had a scholarship, so I emerged free of debt, of student loans or anything like that. So that was nice. In fact, I worked a couple of co-op jobs, so I had about 20K saved up. And with my first job, there was a financial advisor who came into the office, and I'm like, I've got money. Let's invest it. And I think that's how I got started on the investing road. My road is more if you remember Kiyosaki's quadrangle, I'm kind of the investment version. I'm not really so much the business version. And I lived at home as long as I could, which also saved a couple of bucks. And I bought a house also in Surrey where I'm still living, and I I worked extra contracts in the evenings to make extra money in addition to an IT job, which I've always worked in IT. And then at one point, I became a contractor about 10 years ago. I was incorporated. That also coincided with my relationship ending. So despite a prenuptial agreement, there was a significant monetary loss when my ex and I went our separate ways. And I'm always happy that it was early. I'm not happy that it ended, but I'm happy that it ended early. And at that point, I started investing in a serious way. There was a job that kind of made me think that I would need to reach financial independence early. Um, and so I started taking some risks. After the U.S. had their U.S. Housing crash, I started buying investment properties there, which people would find risky. But I was just like, well, this house was 300,000 6 months ago. Now it's owned by a bank and it's 88,000. People are going to have to live somewhere. I don't really see the problem. So started buying individual stocks as well. Up until then, I was mostly a mutual fund guy, but started buying individual stocks so I could pick the ones that pay dividends because for financial independence, you need passive income. And continued with my frugality. To this date, I've never owned a car. I've had access to one in previous times, but I haven't owned a car ever. And so just the accumulation for the last 10 years, I've made good money, but also I invested most of it, and that money has grown and it has paid the dividends over the years as well. So in the last 10 years, I actually looked at the numbers and my net worth went up, let's say roughly 2 million, give or take, maybe a little bit more. I'm at 3.7 now, and my job provided only about half of that. The other half was from various investments, growth, business ventures such as flips in real estate as well. So uh, that's really what makes the difference. If you take a bit of a risk, you can, over the long term anyway, you can achieve your goals.
Okay.
Yeah.
So you mentioned you went in to buy some real estate back around 2008, 2009.
Yeah, I started buying pretty much one a year starting like 2009, and then I bought another one in 2010, 2011, 2012. So uh, they've been definitely good investments as far as money, but they're definitely not the passive investment that real estate is supposed to be. Um, they're property managed by property managers, but then you have to manage the managers as well. So
Yeah.
yeah,
And these deals,
they've been challenging.
and these deals, were they like cash deals? Because I never bought U.S. properties. I find sometimes it may be hard. It might be harder to get the mortgage from them.
Yeah, so at that point, because what caused the real estate crash was the financial crisis. And so it was pretty much impossible as a foreigner to get a loan in the US. So I ended up buying all the properties for cash, which wasn't that much because, like I said, 88,000 I think was the first one, 95 was the second one, 110, and then 140 for the four of them. So it wasn't that much money, frankly. But I did end up getting a mortgage on the house that I was living in Canada in Surrey in order to finance them. But of course, the house was worth more than all those properties back then together, so it wasn't that difficult to finance it. So
Yeah.
the one problem is that real estate depends a lot on leverage, and because there's no leverage here, the returns are basically 3% to 3% a year. If it was leveraged, then on the money invested, it would be much higher percentage return. And so that's what makes them sort of difficult as far as investments, is because they're not really gaining that much in value anymore. And as far as cash flow, it's it's not great. So
But I think your the play there was you're hoping to get capital gains on the property more than getting a 3% dividend. Kind of
uh,
thing. So
that that's right.
yeah,
That's right. And I mean, over the years, they've definitely gone up in price, double, tripled some of them. I had sold one of them. I have three left. I sold one this past summer, and that one, I think that was the 88,000 one, and I sold it for 276. So it's definitely done well.
yeah,
Obviously, going to pay the capital gains tax on it, so that's going to take a little chunk out of it. But yeah, I can't complain about that. But the number one rule with real estate is that it has to cash flow. Now it is cash flowing, 2 to 3%. But if it actually had a mortgage, which is usually assumed that you do have a mortgage, and then you still have to make it cash flow. So if I had a reasonable interest rate mortgage, it would barely be cash flowing, and it's not an investment if you can't make it cash flow. Anybody can make a paid off property cash flow.
Yeah.
So yeah, if you can't do that, then you shouldn't be investing in real estate.
Yeah, you're in the wrong game for sure.
You're in the wrong gig.
You're
So
dirty.
yeah, it's so yeah, I do want to harvest the capital gains at this point, and my plan, or at least that's what I'm telling my accountant, is that I'm going to sell one a year, and we'll see where it goes. I definitely want to sell one next year. I might keep the next two. They're both in Las Vegas, and they're under the same property manager, which seems to be decent. I did have to fire one property manager because they were incompetent, they weren't helpful, and there were extra charges by mistake on my statements. And if I didn't call them on it, they would have just sent me less rent. So I didn't appreciate that. I doubt they were all accidents. Anyways,
Yeah. So I think it's it's very courageous to buy real estate in the States. Like I never got through that barrier of buying remote, especially in the States, and how you manage them there. And so how did you choose the location? Is there like a mindset behind it? Is like the places that fell the most, you went for it, the places that's like close proximity to where you are, or is it like you have relatives there? Or
yeah, well, no relatives. I think I sort of accidentally fell into it. To be honest, I started out in Phoenix first because that one fell first and fell the most. I Googled a realtor there.
yeah, that's
Total accident. He
yeah.
happened to be a Canadian who was living down there, so he was catering to Canadians, so he was very helpful. And I have to confess, I've never seen any of the properties physically. Never.
Uh,
Uh,
that's that's a hard one for me.
well, you know what? There were
You hear
photos.
you hear stories.
Sorry, say again.
You do hear stories. Maybe my stories are different. Where in China, they can like promise you, they can go in and shoot a video for you of what you're buying, but ultimately you're just buying a little box in the sidewalk. So like, you need to have a lot of certain amount of trust in the system. And I guess US has a much higher standard than what we have in China.
So, what was your experience in China?
You hear things when people buy things remote because they know you're remote. So you're very less likely to check on them within like 5 years time. And realtors there can really like, we call it scam you, or like forge documents. There's like nothing out of the ordinary is what they do. And it's hard to build trust. Even if you go there, they can show you a unit, they can show you around, they can even have a rep on the other side saying, oh, the owner is really letting this go because they need money to do business and such. The whole story makes sense, but ultimately what you're buying is just a piece of paper.
So, outright fraud.
Yes.
Okay. I, yeah, I mean, I was so I assume the one you have just the one you have the one property.
I didn't buy it, but I have stories of friends who bought
Oh, I see. Okay, but
many.
did you go see the one that you did buy?
Yes, of course.
Okay.
And actually, I lived in it for like a couple months, and then I found my first tenant, and I just passed it on. That
Oh, okay. Well, that's yeah,
make sure the unit is mine.
yeah. That the owners didn't show up from a holiday.
Exactly. Yes.
Yeah. Okay. Uh, yeah. So I didn't go see them for a couple of reasons. Number one, I'm not a good flyer. Number two, I would have to take a bunch of time off of work, which would have cost me a bunch of money. And I was wondering what value I would add. You know, I'm not going to spend a week there living in the neighborhood, and even after a week, you probably don't get to know the neighborhood. Like I know living in Surrey for my whole life, I know where to go at night, where not to go at night. You know what I mean? You won't know that in a city where you're for a couple of days. I wasn't going to climb into the attic, so I had them professionally inspected by somebody who wasn't recommended by the realtor, because
Oh,
the realtor wants to make a sale, right? And they want you to buy it and not be difficult and not to move on to another house. I you know the realtor, I googled him as far as whether there were any complaints about him. There weren't. So I mean that was it. Had him take a bunch of pictures. Uh, did everything on the maps that I could, and it you know, knock on wood, they're all mine. Everything worked out. Got the property managers again by googling. Got a different one for each property, which ended up being a bit of a maybe a bit of a mistake. But then one I fired and transferred the house to a property manager that I already had the house with. Um, the biggest hassles, frankly, are the U.S. to Canadian currency transfers, and because you don't want to keep transferring back and forth. So you have to predict expenses, like, oh, there's going to be property taxes, so I need to save up U.S. dollars, so I don't transfer whatever's coming in to Canadian and then transfer it back, because you lose money on each transaction. Having to do U.S. taxes is a huge hassle,
oh yeah, there's a huge
uh,
learning curve there.
and you have to pay an accountant a hefty amount to do U.S. taxes. I think the property managers, if they see a foreign address, they are going to take advantage of you,
Of course.
because I think they would be less happy having somebody show up at their office yelling and screaming than somebody who can only do it on the phone.
Yeah.
So, how have your property management experiences been?
Well, the things I have here locally, I manage myself. I like to check on the tenants and kind of build a relationship there. It's just having another friend. But the thing
Okay,
to
so you
me, it's that way. Like if they can actually be like a true friend, they can be a great tenant. Like that's my
okay?
argument. But
Is your good friend frequently late with the rent and you let him go?
I never let them go. I yeah, they're always on time. They
Okay.
tell me if they're late ahead of time. And like building this relationship, I think is a key to like managing your tenants. If you're like so strict, it's like every first of the month you just 9 a.m. you text them, "Where's my rent?" And then they kind of have that rebel side. It's like, oh, I'll just respond to them 2 weeks later or whatever. But if you just take it easy and just make a friend.
Okay, well, good. That's one approach. Usually, professional managers take a very professional approach,
Yeah.
and they try to get access to the tenant's account so they can pull the money out of their bank account or out of their credit card or whatever it is. And they want to do it electronically. They don't want to go collect a check or anything like that. And
No, no, everything is electronic, and I
okay,
got to do a prepayment thing. So every first of the month or whatever, it's just a prepayment. So there's no action between either of us. So
yeah, yeah, just automate as much as you can, right?
yes, yes.
And then only act if the payment didn't go through. Then you're like,
Oh,
okay, your account's overdrawn. What's going on?
yeah, yeah. But the things in China, again, you need there's no really a trust factor there. I've had cases where they say, "Oh, the market's down. There's no one who wants to rent your place. Was just being vacant for like 3 months." But then I was there like at that time, and I went in to check, and when they just used it as a party room.
Oh
They kind of
wow.
sublet it as Airbnb or use it as a party room. So again, it is tough, but the unit did appreciate in value, but my rental income is definitely nothing. Like you pretty much sometimes you just want to neglect the the rental income even and just like watch the thing appreciate, which is not the way to real to invest in real estate.
Yeah, I mean the books that I've read, they want the real estate to appreciate 4%, and they want you to cash flow 4%. If you're getting kind of high single digit returns, you're probably doing okay.
Yeah,
In Vancouver, real estate has appreciated a whole bunch. Uh, in the US, obviously over the years it has as well. I mean, each place is different. It's just for me, uh, I'm going to transition into other asset types, which won't require quite the same hassles as the real estate does.
yeah,
So stocks will appreciate just as well. They obviously could go down, but and they'll pay dividends, which are number one more tax friendly if I buy Canadian stocks, and they will there'll be a higher rate. So 5-6% dividends are not uncommon in Canada. So that's kind of what I'm going to go over the next few years into. As I said, I'll start selling the properties.
yeah,
The first property I sold to pay off the loan that I got in March in order to buy a whole bunch of stocks in March 2020 when they crashed. So I didn't really get that much out of that house other than paying off the HELOC.